All right, we are live. Welcome to the December 2nd, 2025 Bull Session. My name is Mark Robertson. I'm here with my dear trunk-toting colleague, Ken Kavula. Good afternoon, sir.
Good afternoon, Mark. Thank you for putting me on the slimmer body for a change. Okay, I appreciate it. Okay.
There was an executive override in this household that did that.
All right.
And Kim's unable to join us. She is recovering from some malady, and she sends everybody her best wishes again. And we're also joined here by Matt Spielman. Good afternoon, Matt.
Good afternoon, Mark. Good afternoon, everyone.
So we're going to cover some interesting stuff. It's a little bit of a smorgasbord here. We'll talk a little bit about Narnia. Going to follow up on that Industrial Renaissance Exchange Traded Fund as a source of ideas to explore. I have a little snippet where I thought Fortune was going to launch on Buffett again, but they're behaving themselves fairly well. I'll probably expand on that. Of course, the Groundhog Update and a little bit of quick hunting for tonight's roundtable. So, Ken, anything else you'd like to add?
Well, except that if you'd like to give us some suggestions for what we might do with Buttonwood, we're going to be opening up Buttonwood next week, and we have some cash, and we have at least one candidate, maybe even 1.5 candidates that we might be looking to raise some money from. So we kind of are interested in a stock to add to Buttonwood if, in fact, we have a great candidate. So if you have a candidate or so, drop me a line, drop Mark a line, and we'd be glad to take a look at it before next bull session.
And those of you that are staunch advocates of Gentex, meet me at the corner. We'll hand out pitchforks and torches, and we'll all protect it from Ken. Just kidding. All right, here's a quick look at some of the stuff going on. We do have a roundtable tonight, so we'll probably be kind of a little rushed with this here today. We want to get this done and onto the roundtable tonight. But yes, the Knights are shoveling the snow. Cy is actually off on a birthday jaunt tonight, and he was kidnapped and sent to Ireland in the middle of the night. So far it's just Ken and me, but we'll make that work. And Ken, I did leave the Ferrari in my tennis shoes up there on the screen just
in case I'm looking for gift ideas. Okay, all right. Got it.
All right. I want to talk a little bit about this for just a minute. This goes way back to 2006, kind of the early days of Manifest, and we wrote an article around the theme of the Chronicles of Narnia and this magical adventure. And it basically comes from correspondence from a friend of ours that's been in the community, in the better investing community for a couple of decades. And she basically said, this has really made things easier, and I'm willing to look at stuff that I haven't in the past. And I don't know about you, Ken, but sometimes I think remaining simplest can be one of the more challenging things in the realm of investing.
And I agree with you, Mark, wholeheartedly. And you know that I was going to agree with you right from the beginning. But I watch TV with the CNBC, or rather, I let it play in the background as I do work and everything. And I sometimes think they just get overly excited about things that nobody understands. And when you do that, I just think you confuse the average retail investor.
Yeah.
There's so much stuff out there. I'm really crusading against some of these commercials now that are telling you they have the secret to avoiding any of the problems that the market may present. All you have to do is pay whatever they want you to pay, and they'll tell you what the secret is. Then all these different advertisements that are coming on the financial networks about people with their different ways of deciding the next doom and how it's going to happen and when it's going to happen and everything else. It's irritating after a while. That's a good word that I like to use a lot with that kind of commercial.
Yeah, so, I made a comment in another meeting this morning about how it sure seems like Mark Hulbert's gotten pretty grumpy here lately. He keeps talking a lot of gloom and doom, and I think with the long-term perspective, it's an annoyance to us. But you can actually retrieve this article at that link shown there. That is a public link. If it doesn't work for you, let me know. But here basically is the correspondence, and there are the kids walking through what could be either Ken or my yard, with the recent snowfall. But I do treasure the classics, especially this time of year. And this person is basically saying, you basically took away some of the mystery and fear of investing. And she was the inspiration behind this story, and it was Faith Fessenden out on the West Coast. And I think that the stuff that we have done here over the last 20 years really is very faithful to Nicholson's investment club dream. And I really believe in this notion of being an oasis from chaos. That just echoes what Ken was just saying. In fact, any of you that want to meet Ken and I at the corner and get out the pitchforks and torches and march on CNBC, we could do that. But yeah, I think that I was also with a very experienced, staunch member of the Better Investing community recently. And when he realized that a stock selection guide wasn't just for buying stocks, he almost fainted. And part of our message is that methodology applies to not just buying, but also to selling and taking care of portfolios. And that's what we try to do here. Your thoughts, sir?
Well, my thoughts are, Mark, that guide, and that's what it is. It's not a magic tool. It's not a black box. It's a guide to judgment, and just forcing you to think a little bit about the most important things, and at the same time not giving you an infinite number of things to regard and to bring into consideration so that you end up paralyzed by your analysis. It was elegant in the simplicity, and at the same time the approachability of deciding what is a good stock to buy, and then continuing to help you decide what's a good stock to continue to hold. I agree with you that you don't need a lot of extra tools. My extra tools consist of Value Line, which I have been using since the mid-90s, and Manifest Investing, since I had been using before it became public. I think those are enough supplementary tools for me to keep in my toolbox. I'll occasionally look at a lot of other things. I'll deal with Morningstar when and if they have a lot of information about my company. But for the most part, simple is better. And when you're trying to explain to somebody else why you bought the stock, I think you should be able to do it in 5 or 6 minutes, not 50 or 60 minutes.
Well, thanks, Ken. And again, we appreciate you, Faith Fessenden. And again, you can get right to the article, which covers some of that thought process in a little bit more detail right there. All right, here's our disclaimer. No investment recommendation is intended. This is entirely an educational demonstration of all the stuff we just said. Make your own decisions about investments or resources. If you'd like copies of the slides, or if you have questions or suggestions for future topics, our 2 email addresses are right there. And as many of you out there in the audience know, if you send us something, chances are we will tackle it. Sometimes badly, until Ken saves me. All right. Okay, we're not going to spend a lot of time on this one. I did want to point out that we have had almost a 20% gain in Portillo's since the bottom.
Fastest growing restaurant stock of the last days.
The last couple of days.
That reeks a little tiny bit of playing with statistics, Mark. I'm sorry.
It's a sign of life too. They have a little bit of relative strength, so that's all, we're gonna leave that and not jinx them. All right.
Okay. Well, then just turn the page. There we go. Okay.
All right. I see that the green bar on the right and has 1 month left to go in formation, but it has peaked back above the red line. That drives the doomsayers crazy. But November was bumpy. It was rough. The NASDAQ actually finished down a couple percent. I am thrilled to see some of our portfolios finish up. And we'll see some of that as we go through here today. But yeah, it might be a little bit of a rough December. But it's just 1 month in a very long marathon. What do you see, sir?
I see a fairly average market, and that means that finding stocks will not be as easy as it could be, but it's not going to be nearly as difficult as some of the pundits would like us to believe.
Yep, the song remains the same. And I mean, what's wrong with a 9% average return if you can go out there and find some 12, 13, 14, 15 percenters? Good stuff. All right, keeping going. Here's just a quick 10-year look back at our 10 most widely followed stocks, along with a couple of our demonstrations. We do have the round table tonight. Round table has sagged a little bit, but I have high hopes for it. It is still 2 percentage points ahead of the market since 2010. And this is Index Central here, all of this stuff here. The Buttonwood Bulls, it's really nice to see this number is green. And let's hope that this is going to be moving up the list.
It's also nice to see, Mark, that it's now higher than some of the numbers above it. So we understand that the benchmark for Buttonwood is set extremely high at over 20%, and that will be coming down, unfortunately, because I believe in averages. So maybe it'll be coming down to as much as 15 or 12 or even 10 or even 8. But that's just long-term investing. That's what happens.
Yeah, around here we basically think of it as reversion to a trend, not necessarily reversion to an average, but a reversion to a trend. And yeah, those numbers are definitely a bit puffed up. This one is puffed up a lot. So that is true about the market. The market over the last couple of years approximately has been pretty hot. All right. This is just to assure everybody that people are still shopping. U.S. consumers spent a record, we'll call it $12 billion, up nearly 10% over last year. And I thought I was doing something really high-tech, high-powered, and unique when I used AI to go searching for deals. Apparently a bunch of people did. You can see the numbers right there. And Cyber Monday yesterday was actually even bigger. So, Ken, I'll also let you know that Wendy is going to let me buy a new computer.
Well, that's been on my wish list now for about 6 months. My computer either needs a complete DNC, dusting and cleaning, or it just needs to be replaced. It is really slowed down quite a bit, and I know that's because there's all kinds of stuff that it's accumulated from all of my cyber travels throughout the web. So
absolutely, sometimes you just got to refresh. So we contributed to this number yesterday, and the new machine will be here in a couple of days. And this long story is, you guys have seen my picture of the tennis shoe with the hole. I don't know whether I'll post this ever or not, but I do have a key on my keyboard which is held together by duct tape. And
it's time.
she saw that. That's exactly what she said. She saw that. She goes, "Is that duct tape?" And I said, "Well, yeah." And she said, "It's time." So he's going to let me do it, Ken. Is that
Sounds
cool or
good.
what?
Sounds good.
All right, we are just simply here featuring the 20 best performing mutual funds and exchange traded funds based on their 10-year trailing performance. If it's not 10 years, the performance since is highlighted, so it's a different time frame. But the only way you can compare investments over different time frames is to compare them versus the benchmark. We call that a relative return. And that's how you can actually make these comparisons over time. And obviously this one is young, wild, and crazy, the Nuclear Renaissance Fund. But there's some other fairly interesting entries in there. You see a lot of technology, a lot of that kind of stuff. And I will point out, Ken, that we now are down to only 17 funds out of 650, beating the market by 5 percentage points, that goal that investment clubs talk about.
And we've been trying to make the point now for the last year and a half or so that that's an extremely aggressive goal, and you should be celebrating beating the market by 2 points. Beating the market by any points should be celebrated, and especially when the market's doing 20, 25, 28%, as it's been doing off and on for the last year and a half, 2 years.
And you might be sitting out there thinking, well, there's a whole bunch of companies at 4 point something. There's about 12. So that just gives you some idea how fast the numbers fall off. And the thing that we wanted to bring back from last week is this First Trust American Industrial Renaissance, and talk about it a little bit. Ticker symbol AIRR. And the thing we were curious about is because they have a relatively modest growth rate here for the holdings in the fund. And most of the successful ones at the top of this chart have, we'll call it a 14% average growth rate. So we always talk about that. So the obvious question is, well, how are they doing that? So what we thought we would do is understand who they are and what they're investing in. Here's the actual full name of the fund. Here is the ticker. You can see that Morningstar does give it a 5-star rating. They are critical of the management, but they still give it a 5-year performance, 5-star performance rating. And then Ken, I knew we may have to tell you off, big guy. They're talking about small companies and community banking. So are you going to be okay with that?
I'm going to be very okay with that, and I'm going to also indicate that this strategy that they use, which I think I might characterize as swinging for the fence, is probably a strategy that would drive a lot of retail investors that want to sleep at night, drive them to a lot of sleepless nights. So it's a great source for ideas. I'm not sure it's a great source for the way to structure a portfolio, however.
And that's all a personal thing. I mean, Betsy Wills is in the audience. Betsy's going to have no trouble sleeping with some of these companies, Ken. So,
well, or owning a few of them, I'm going to have no trouble sleeping also. Owning a lot of them, I think that might cause me some very sleepless nights.
So here's a look at the holdings using some of our parameters. You will recognize most of those tickers, at least a little bit. Notice that they have Comfort Systems in here, C.H. Robinson. This is Mastech, MCore. It's been in a bunch of better investing presentations lately. This is one of Betsy's, BWXT, in response to the energy needs. And just from top to bottom, you can see there are some fairly well-known and established community companies in here. Here's Powell down here. So again, relatively low growth rate. They're clearly capturing these, or appear to be capturing these, when they're undervalued. Now, Ken, you had expressed the theory last week that doesn't appear to be holding up here.
Absolutely. I thought maybe some of the performance was going to come from yield, but it's obvious to me by looking at this yield column here that very little of it's coming from yield. With a 0.6 average, the average for the market's only about 1.15 right now. So they only have 2 or 3 stocks on that entire list that would sit at average or above. So it's not coming from yield. Yield is contributing a very, very small amount to their total growth for the whole darn thing. So I think what we said before, and Mark's going to show it on performance here in just a moment, that they're very unorthodox in their choices. They don't mind losing a big amount if they make a mistake, and they certainly will be celebrating some of the kinds of performance they've had over the last year with some of the stocks they own.
Yeah, it'd be fascinating to know what their original investment in Comfort Systems was. You'll see what I mean in a minute. I'm going to answer a question from last week. What triggers an audit? This is what triggers an audit. Okay? One of those 2 numbers is pretty wrong, probably. So we'll be taking a look at that one for sure. That is a regional bank that probably is neglected in the database, would be my guess. All right.
Yeah, there's 3 at the bottom of the list also, Mark, that have a a wide disparity. I tend to look at how much bigger or smaller the bigger number is than the other one by percent rather than by absolute number.
Mm-hmm.
And when I'm looking at those last three on that list, I'm saying to myself, those proofs and those pars don't go together. Maybe we have to rethink what's going on with those right there. There's another one there at PRIM. I don't know what the company is,
That's
but
Primoris.
a 3% return and a 10% proof. That's just not in the same. That's not in the same ballpark like we talk about.
And a lot of times, what you'll find is that the analysts are having trouble keeping up with capital strategy. In other words, how much debt, that type of stuff, liabilities.
And I can understand it in a company that's been doing what Comfort Systems has been doing recently, Mark, where you get this extreme growth going on and the stock price following it, and then the par suddenly plunges down to somewhere near zero, even though the company keeps on going, whether it's momentum or whether it's anticipated increases in sales or earnings, whatever it happens to be. We're looking at the prove and the par for Comfort Systems, which is maybe the most widely held stock on this list here from our community. And we're seeing a disparity, and so an audit probably would be in order. Yeah.
A lot of times, and we've talked about this before, it's a matter of the rhinos, the institutional analysts, catching up.
Absolutely.
So sometimes you have to wait for that. So how would you use this information? What are they doing? Here's actually diving into the company or the fund at Morningstar. Again, you just type the ticker in, go to the portfolio, drill down into the holdings. And what I thought we would do is just demonstrate here very quickly. We're asking the question, how are they doing this? So I'm just going to grab one off the list. This happens to be a company that has done very well for them in the last year. This Kratos Defense and Security Solutions. And you can see that they actually bought this less than a year ago. Okay. Anything else on this list? Jump at you, Ken.
Well, I'm looking down that 1 year return thing, and if I would have bought Argon in April in 2025 and then had a yearly return annualized out to 135%, I think I would be pretty happy. I think the size of some of these numbers, both in the positive direction and a few in the negative direction, give me the reason why I'm calling this kind of an aim for the fence kind of strategy. That they certainly have had a great number of home runs. There's a 95%, and that's a more than 10-year holding in the second one down, Comfort Systems. The most recent yearly return at 95%. There's another one down there at Dycom at 93%, and that one they've owned for more than 10 years as well. So they have a knack for picking companies that are going to give them outsized returns, but they're not afraid to strike out either. There's a number of negative 40, 45s on the list, couple of them on there, and those are definitely strikeouts that they're still holding.
Now, Ken, sometimes my memory gets kind of fuzzy, but I'm relatively certain. And if you think about it really hard, one of the members of our New Orleans audience was pretty enthusiastic about Argan and a couple of the other natural gas related companies, liquefied natural gas type
Absolutely.
area.
Absolutely.
We were told by the New Orleans audience to take a closer look at that, and we didn't do it. So there you have it. It was also on that guy from Seeking Alpha's list a year ago for his best small companies.
I am happy to report, Mark, that this meets my standards for looking at the list. I own at least two stocks on the list. I own Comfort Systems and I own Dycom Industries, and they've been treating me both very, very well. One of them I only own in a club, but one of them I own personally. So,
yeah,
when you find a couple that you own, then you want to look at the rest of the list, because they might be in the same style. If they are, then they're great ideas, and if they're not, then you haven't wasted that much time.
All right, so we're talking about this as a source of ideas. What I thought we would do is say, well, what might we have seen with Kratos back at the start of the year? So what you see here is the last value line before that purchase date here, this January 20th, 2025. So what would have been the published value line in service or published at that time? And you're looking at it, November 29th, exactly a year ago. And there's the company. And they obviously are in the realm of making things that destroy things and shoot things. And you can see that Glenn Pierre Johnson had a fairly decent, at least verbal outlook for the company back in that time frame. You see it's been kind of bumpy. So what's that look like visually? What do you think, Ken?
Well, I like to look at the par value to start with, because sometimes that gives me an idea about whether I'm looking at a candidate, at least from a numbers standpoint, might have any might make me feel good. And it's not a particularly robust par, especially for a smaller size company. I'm not quite sure that I would have gone to any more trouble on this one, and therefore probably would have missed a really big opportunity. Hindsight is always perfect. Remember that, please. But I do like the sales line. That's good, strong sales. I was intrigued, Mark, by the fact that the analysts from Value Line chose to call out a couple of pretty major successes in the defense industry. This is the industry this is from, and they were testing these Zeus 1 and Zeus 2 suborbital missiles, and they were successfully tested. That's usually an indicator from a standpoint of the defense industry that there might be lucrative contracts on the horizon. Once you can get a system that's going to actually work, then you want to make copies of it and have lots of it on hand if you need to employ it. So,
Yeah,
excuse me.
I would also be nudged to wonder, was there any change in management? If you go just very shallow into the company, one of the things you discover is that their partnership with GE Aerospace probably stabilized the company. So I'll tell you what I see. All of these numbers, by the way, these are not zero back here. These are single digit quality numbers, right? And I think this is a textbook case of an early stage company that every time it looks like it might be taking off and just can't seem to get the wheels off the runway, you can see that the earnings disappear, right? And that just kills the stock price. This type of stuff going on just kills the stock price. Well, whatever they did or are doing, including the partnership with GE, if you can believe this, and apparently some investors and rhinos do, if you think they finally have escaped the launch pad, basically reached escape velocity as an investment, that this is one of those companies. And that is basically what they have done, at least so far.
We should caution folks, Mark, that we've talked at length about this launchpad investing, and we've looked at lots of companies that have failed in their earnings after having earnings twice, and then gone on to be quite successful. But we've had a very difficult time finding a place where a smaller company has failed in their earnings after having earnings 3 times and then being successful. So far, Kratos has made the jump into 2025 without, 2024 without having a third rendezvous with negative earnings. So if it stays like that, then the sky might be the limit, especially as investors and analysts start to follow it.
Yep.
Again, however, I'm not sure that many of us would take a full position in a stock like this. This certainly would qualify in my mind as non-traditional investing,
I
as
agree.
defined by Mr. Nicholson back in the 40s.
Mhm.
And make sure you have the money to lose if you're going to invest in non-traditional stocks like this one. That's all.
Yeah, I wouldn't deem this to be a stock for a beginner, but I do point to there's a lot of upside here. Financial strength and EPS stability. If they keep doing this, that number's going up. That's just math. And the financial strength is, this is a company that actually has more cash than liabilities. So this number's low, in my opinion. So this number's probably also low. We'll see how it pans out over time. But if that operating margin goes up, could be a fascinating thing to watch.
Well, and we've noticed, Mark, especially in these companies that are developing technology, that as soon as they develop successful technology, the operating margins go way up because because they can replicate whatever they've been successul at and finally start to sell it at a pretty good clip.
Yeah,
So
it's a scalability.
that 11% margin's not indicative of what might be happening, especially again for a defense contractor.
And I will editorially say that, in my opinion, Value Line gets that number low quite often. So scalability is the issue there, and sometimes it's tough to foresee scalability. All right.
It is interesting to see Prove following very closely to par in this particular analysis, Mark.
Absolutely. All right. Moving on. We can skip this page. I'm still not on it. I'm bitter. But yeah, everybody seems to be doing much better. We've had a little uptick in average return by groundhogs, about the same number beating. There's 115 of you out there beating the Wilshire 5000. That's cool. And congratulations, Daniel, for continuing to hold down the post. But you have some serious competition in your rearview mirror.
Well, and I want to point out, Mark, that in the last 4 months now, it's been extremely difficult for anybody not in the top 12 or 13 to move into the top 12 or 13. And Paul Moore has made a huge jump in the contest, especially when it's near the top like this, moving from 16th position all the way up to 3rd. And if you look at the numbers over there in that second last column, you'll notice that that's close enough now for a horse race between probably the top 4, maybe the top 5 people on that list.
Yep, 2 months to go. I'm personally cheering for Abby Joe. By the way, Stephen Kress picked Argan for that portfolio, Ken, at number 41.
Okay.
So I'm cheering for Abby Joe, and just a number of clubs that we have spent some time with or know the people involved. And there's a pretty decent slug of them on the list right now.
We just barely get to say booyah on the list, don't we?
Just barely. He's never won. Shh. All right, here's a look at the Buttonwood performance. Recent performance has been fairly strong. It's one of the screens that comes up when I turn my computer on. Yeah, the one with the duct tape key. So I see something very similar to this, and it makes me happy. And you can see that everything is pretty much in the right direction. We will meet next week to consider any actions that could be taken. But we don't want to get hyperactive either, Ken. But we do want to maintain that portfolio return forecast, the red line, right where it is, plus or minus.
And it's probably time to start making the point, Mark, that a lot of months, if you're investing regularly, all you want to do is put any cash that you have to work. You don't have to make sells or move around in the portfolio. Sometimes it's just spending the cash you have and moving on to the next month.
Yep. So 6%. Here is the actual portfolio. Again, we won't spend too much time on it, other than to say the growth's pretty good. Could be a little higher. The par is pretty good. Could be a little bit higher. The quality's fine. There's a couple here that the crowd with the pitchforks and flaming torches. Well, we're going to have to defend this one with Kavula next week. 'cause that single digit number just causes him anxiety. But we'll probably have a more detailed discussion about NICE also. That is really taking a dip in price down to 100.
And Mark, it's not so much the single digit number for Gentex, it's the orange background on the par value that goes with it. Those two numbers just don't seem to make sense to me. So I think we really want to think our way through this one and make sure that we haven't become emotionally attached.
Oh, I am emotionally attached. I'm not trying to hide it.
I know.
All right, so there it is. We will take a look at that portfolio and next week. Just real quickly, I got the image on the left is from my cell phone, so I snapped a picture of it. I figured they were once again attacking Warren 2 times in the past, including that article on the right. They have written basically they are tribute articles, but then they basically go on to say you can't do this. Not really, or maybe just Warren can do it or whatever. The message is very mixed, and doesn't really fit the title so much because they're basically saying what he's doing is impossible. He can't do this forever. Lo and behold, he has gone on to do it for the next 43 years after that article was written. And we'll spend a little bit of time talking about it. If you want to look at this full article, it's in the Manifest Forum. Here's the link. And I think it's required reading for a long-term investor, not necessarily a beginning investor, but for somebody who really wants some context on long-term investing strategy. Anything on this, Ken?
No, let's proceed.
Let's leave Warren alone. Okay, what I thought we would do is romp around and talk about my selection for tonight. So this is the current Sweet 16. This version of the Sweet 16 happens to be the 16 companies that have the highest manifest rank. What is manifest rank? It's a combination of the return forecast here in combination with the quality of the company. So those two things basically equally weighted, but these are the top 16 ranked companies. So you see they've got decent return forecasts. Many of them would end up in the buy zone on a stock selection guide, and many of them are going to display up, straight, and parallel characteristics. So I'm just basically looking for, what company might I be most interested in this evening. So I'm going to jettison these first two. I've been fascinated by Fuji in the past. We'll probably spend some time with that in the future, but these are the two lowest ones, so I'm going to go ahead and jettison those. What do you think of the list so far, Ken? Did we lose Ken?
Oh,
I own 3 companies on the list, so it meets my standards. So it's an interesting list.
Okay. All right. So I thought what I would look at next is the growth. Are any of these slower growing companies, perhaps on a hot seat because of that? And DuPont's an interesting study. There are people out there that think that the chemical industry is not dead, and that you'll find some elevated, exorbitant return forecasts for DuPont and Dow. But people that we know well are a little bit skeptical about some of the assumptions. I'll just leave it at that. This growth rate is enough to say, maybe not. British American Tobacco, 3%. Allison, 6%. Not bad, but we want more for the roundtable portfolio. So I know this makes you very comfortable, Ken. We are getting rid of the companies that have low single-digit growth rates from consideration.
In my mind, we could go further even, but those 3 are definitely candidates that I would not consider for the roundtable portfolio. Yeah.
All right. The next one, I'm going to throw in the Value Line average return forecast, so we can see, is there any consistency here? I think Value Line's probably low on that forecast on the right, but fine, it's circled in red, and maybe we wait for a better day. But what I've got highlighted here with red arrows are companies that are already in the portfolio. I'm not saying there's anything wrong with these companies. They are candidates for study. I just don't want to add them to the roundtable portfolio. Would you concur, Ken?
I guess, Mark, the only thing that I wouldn't want to automatically throw them up because they're already in the portfolio. But if they occupy more than 1% of the portfolio, I definitely would take them out of consideration. If they're down to only one other person choosing at one other time, I think I might want to keep it on the list, but I'll play the game, and I don't have any problems throwing all of them out. Although I did consider two from this list for my final choice here. I considered Brown and Brown and Technoglass for my final choice. Those were two of the five that I had narrowed it down to. So we're okay. Yeah, we're okay.
Yeah, I'm with you on that too. I mean, Brown and Brown was my grandson's selection with the cheetah, so I'm definitely emotionally attached to that one. And the other one that I set aside was that MPLX, which is probably related to Argan, which is probably an omen of bad things. But that LP is what took it away from me for now. Okay for individual portfolios. LPs are not necessarily the best idea for club portfolios, and that is sugar coated. So.
And Mark, just to explain what you're saying, you're basically saying that the tax implications are
Right.
are way different than you might expect when you're dealing with a licensed partnership.
Mm-hmm. And yes, Ken, Deckers is a one-time selection by Ann Manning that was seconded by the audience. So that one is still in the running here. You know, no matter what your crusade against shoes, great shoe company, reminds me these days. So here's what it comes down to. I don't know which one I'm going to end up with. I threw one more thing added as a potential tiebreaker. It's this relative strength index. So anything down closer to 30 is potentially oversold. Anything above 70 would be overbought. So the lower the number, the more attractive it potentially is. And
here's an example of a numerical value not making much difference in your final choice, because
no.
Those are all pretty much the same as far as I'm concerned. Yeah.
Yeah, so I'm comfortable right at this point with any of those. I might set Deckers aside just because you badmouthed the company a few minutes ago, and that RSI. But Sprouts, Dorman has been whispering to me for a couple years, so I might as well buy it so the price can go down for the rest of you out there.
Well, and I will say, because you asked me to say it when we got to this point here, Mark, that Dorman was also one on my final list of five that I had gotten down to before I made my pick for tonight.
I didn't force him to say that, guys. I mean, he volunteered. And then, of course, Vital Farms, if Matt was with us tonight, he probably would be doubling down on his selection of Vital Farms. Matt, are you still with us today?
Yeah, no, I've been quiet, but waiting. My 15-second pitch. This wonderful company in this list, as of November 14th, had 34% of its float sold short. So somebody thinks it's in the wrong business. 99% of its float is held by institutions. So there's a kicker that I hadn't covered in the last two times I picked it.
Yeah, and your story about adding production capacity is still intact, correct?
Absolutely. They have added, they're actually ahead of schedule. They have added the full capacity in Egg Central Station in Springfield, Missouri. That's a $1.2 billion capacity in eggs. They also, it'll be funny to see what the short float is on December 15th, because December 16th, they're having an investor day, which I tried to get to in person, but they were shy about that. So I'll be listening in, but I hope that they will be vastly upgrading their long-term revenue projections at that meeting. So that would be a fun Christmas present.
Yeah, and it was down quite a bit today, so we'll see. And I just made a footnote. At some point, Ken, we probably should talk about this short selling thing. I don't pay a lot of attention to it, but when a company gets very, very short sold, and we'll define it and describe this for everybody, it can be quite beneficial to the people who buy it and hold it. So
I researched it and picked it twice and didn't even pay attention to it because it seemed like such a great steady company. Why would that even be? But then hit me in the face, and in a good way.
Yep. And the short sellers have a pretty good track record, so that's also something to factor into any deliberations. So,
Matt, is there any recent news that would tell us why the price has really moved in the negative direction so dramatically in the last maybe week and a half?
Not in the last week and a half, but this was when I picked it the second time in August. It actually bumped up 30%, and it is fully back down to the levels of midsummer in July when I first came upon it. The industry trend is egg prices are dropping, which if you look at, if you're going to study this company, please also study the largest company in this segment, which is Cal-Maine Foods. Ticker is CALM, Calm. Standard eggs are a commodity. In fact, there's even commodity indexes. You can trade egg futures, like you can trade oil futures or wheat futures. And you can see the price of commodity eggs because of the bird flu epidemic, which is actually still ongoing. Bird flu made a lot of headlines in 2022. It's still ongoing. The U.S. layer flock is 10% below where it was in 2022, which has caused everything going up. But specialty eggs, which is what Vital Farms solely deals in, and they deal in pasture-raised eggs. So let's say above cage-free but below free range in the friendly to the animal spectrum, are sold on long-term contracts. And that was an insight that I discovered in Cal-Maine's. They have an FAQ, but it's really a document on the bird flu epidemic. And so I do not expect Cal-Maine's prices or Vital Farms to actually be impacted at all. Their wholesale prices to stores will not move, or will not move much, even as egg prices come down to whatever they're going to go down to. And so I think that the short selling is a large bet on a commodity price drop, what, like we've seen in soybeans and many other things going on. And I don't think it exists in this segment.
well, Ken, I just got this image of you and me as Eddie Murphy and Dan Aykroyd on the Trading Places trading floor.
Trading orange juice contracts, right?
Orange futures, right? Orange juice.
Yeah, I should have said like orange juice.
Stay tuned.
So we'll see, but I think there's a plausible way to be skeptical, but I think that misses some of the area of the research, and is actually appropriate for Cal-Maine. Cal-Maine is so cyclical. Their dividend policy is actually a variable dividend policy. They pay a fixed amount of their profits out. So it looks quite tempting. It's a high yielder. It yields more than 10% and a PE of 4, but it's a cyclical company at its high. And that is not what this company is.
Matt, Cheryl in our audience is raising a point. She shops at one of our regional grocers that I shop at and that you're familiar with. It's Meijer's.
Yeah.
And she says the price of Vital Farm eggs at Meijer's are in nosebleed territory.
Yeah. I mean, they are. They're definitely $8, $9, $10 eggs. And a lot of stores have been running specials on regular eggs. And again, it's I'll say, despite that, you can see the growth. Vital Farms has been growing at 27% a year. It actually it started in Austin, Texas. So its first commercial customer, not surprisingly, is Whole Foods. But I will tell you that the price positioning of cage-free, pasture-raised, free-range eggs over regular eggs is actually a manufactured difference of the grocery store. The grocery stores have been buying those specialty eggs at half the price of standard eggs for 2 years. And so there are reasons for that, of course. Having that great a deal helps them to offset the high cost of regular eggs. And I believe they're also, as a group, price signaling that these are higher quality eggs. They don't want to invert that and kill their standard eggs. But a lot of that, in my research, is a construct of egg retailing and not at all in the wholesale level. And we'll see if I'm right.
Well, good stuff. I mean, I will say I'm not proud of tackling that woman because she took the last can of creamed corn on the day before Thanksgiving at the grocery store. The things people will do in grocery stores.
What are you buying canned cream corn for in the first place, Mark? Come on, all right?
I was encouraged, read forced to do it, Ken. And yeah, I resisted, but you know who loses that battle. All right, here are just your reminder that we do have archived all these sessions. The bull sessions are special editions like the best small companies, and yes, the roundtables are archived on the YouTube page. If you have trouble finding it, this is what I put on my taskbar to go straight to it once you figure out where it is. So if you have trouble finding it, let me know. We are going to make that a whole lot more accessible on the public and the new Manifest Investing homepage.
Yeah.
All right,
Mark, I've been wait, stay on that slide, Mark, if you would, the one you were just on.
Sure.
I've been doing a lot of work when people ask me about this, sending this link out, and what I find is that people seem to think that I've typed the link wrong when I send it to them, and they correct it for me, and they put at Manifest Investing, and then that takes them to a place that they don't know what it is. Sometimes it says there's nothing that there's there, and sometimes it takes them somewhere else. And it's not Manifest Investing, folks. It's Manifest Invest. I know that doesn't sound right, but that's what it is. So use the link as typed. Don't correct it.
Yeah, Ken is talking about the actual URL or the address for the website. If you type Manifest Investing in the search bar at YouTube,
that'll take you there, right?
Yeah. All right. All right, so there's my shoes, Ken, and there's my Ferrari, still on my Christmas wish list. In just a moment.
Well, you were supposed to get me a price for the shoes. Have you done that yet?
Working on it. I basically
working on it.
I farmed that task out to the Heart of Illinois boys. We'll see if they come through for me. But we are celebrating the fact that Tin Cup continues despite all of the challenges over the last month or quarter, and still is percolating near all-time highs. And I believe that's it. That's what we have for today. We have a roundtable coming up tonight. Any other questions or comments?
We should remind folks that by now maybe they're getting used to it, but this roundtable starts at 7 p.m. Eastern time. So set your clocks, make sure you're there, and you'll be just talking to two guys tonight because we've had an illness and a birthday and a charitable event get in the way of our presenters this evening, and so you'll have to listen to the two guys and then see where we go from there.
A corporate kidnapping too.
A corporate kidnapping. I forgot that. Yes. Okay.
All right. 7
That sounds like a holiday movie if you blend that together.
We'll give you more than 40 minutes notice next time, Matt. So with
That's fine. You know I would if I could.
I know.
Well, now it's time to call Kevin, Mark. He has about 2 hours here, so you know.
Desperate days.
If any of you out there call him, I will never forgive you. No, we got to have Kevin back pretty soon. But again, hope everybody had a great Thanksgiving and headed into a great holiday season. I have had a couple of requests about Black Friday. We're not going to do Black Friday. We haven't done Black Friday for years, but we're going to do something during the month of December. We're still putting the final touches on that. We do expect that the website might be ready to roll out this weekend. Knock on wood. No promise, but we're really close. We'd have been farther along, but Montezuma kind of interfered a little bit here in Michigan. Anything else, Ken?
Well, I want you to put something on your calendar, Mark.
Okay.
Okay. I want you to put January 5th on your calendar for a visit to the Wolves to explain the new Manifest site, okay?
I would be fine with that. Cool.
All right. Well, I promised them that I would invite you publicly so that when we got your answer, everybody heard it, okay?
Well, I'll do a little bit of a tease because I don't think we're too far away from this. You know, earlier we were talking about needing to audit companies that had strange results. What if you could override those values and basically insert your own judgments and use them on your dashboards. That's going to happen. So that's a little bit of a tease for you guys out there.
That's a huge tease if we can do that. Okay.
We are very close to doing that.
All right.
All right. With that, thanks everybody. Hope to see all of you tonight, but we'll see whoever comes, and Ken and I will get back to toting that case up I-55.
Good afternoon, everybody. See you tonight, we hope.
See you shortly, Ken.